Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this document last year was included as a piece of the annual report that we gave out at a regional board training. This year, due to the conflicting dates with the financial piece, we split this out separately, and you've already received your academics and compliance and governance report. So also, instead of having another regional training, we're trying to bring all the schools a little video. So we hope you enjoy this, and this was, if you wanted to compare these numbers to last year's report, you would have to go into that annual report, and that's where it would be located for comparison purposes. So with that, we'll get into the review sheet, and I'll kind of explain where some things are derived from. Most of it's from the audit. There's a couple things that aren't. And then there's calculations from some of those numbers, so I'll kind of go over everything just so we're all on the same page. So we'll start over here in the statement of net position first. These are all derived from the audit. To show you that, I will use total assets as an example. So 12,755,120 will go to the audit. Here's the statement of net position. This is at June 30, 2014 again, as a point of reference. Here's all of the assets, and then total assets down here, 12,755,120. So you could come back and verify the other numbers if you want. For time, I won't, but we can look at those right here. Now down here, you'll see the ending net position. This is the ending net position at June 30th, 2014. The previous net position is the net position at June 30th, 2013. So you'll notice that the net position increased. Though it's still negative, it increased from 13 to 14. So we will move down for a moment. This is the balance sheet area of the review sheet. So here's the current assets that are from the general fund. I'll show you that. And then here's some fund balance classification. So we'll go back to the review sheet, or excuse me, to the audit. The balance sheet is 2 pages after the statement of net position. So 1, 2. Here's where it says balance sheet. Now, if you recall, I said the general fund column. So there's other funds here. We're sticking for this part of the review sheet with the general fund column. So it's important to know what's going on in these other funds, but for this area, these are referencing the general fund column. So here's the general fund assets. Then if we scroll down, here's the general fund balance classification. So we have 3: non-spendable, restricted, and unassigned. So we'll go back to the review sheet. So you'll see here's those assets again. Over here is the fund balance classifications. So unassigned are amounts that are available for any purpose. These amounts are reported only in the general fund. Restricted are amounts constrained to specific purposes by their providers, such as grantors, bondholders, or high levels of government through constitutional provisions or enabling legislation. That was a tough one for me. Non-spendable are amounts that cannot be spent because they're either not in spendable form or are legally or contractually required to remain intact. So these definitions are in the audit, and I showed you where the numbers are at in the audit. So these are something to look at from year to year, and important to know what they are. So with that, we'll move up. Here's the general fund activity. So this kind of takes the activity during the year and puts it into a really general description from a broad perspective. So the beginning fund balance, the total revenues, total expenditures, other financing sources, net change, and then the ending general fund balance. So this kind of gives you a quick overview of what's happening. Page 2 goes into more detail, so we'll get there in a moment. So below that, you'll see a couple of percentages. These calculations are derived from these numbers. Let's quickly go over what they are. General fund divided by revenues takes the ending general fund divided by total revenues, puts it in a percentage. General fund minus restricted divided by revenues takes, it does the same thing essentially, except it subtracts out the restricted amount down here. So that's important when you have money that's restricted. It's important to note what's kind of available, so that's why these two calculations are differentiated. The Charter School Office really focuses on this one to see if it's trending upwards or downwards from year to year. So this one is in relation to that if the school utilizes a restricted fund balance. So we'd like to see this above 10%, which it still is with the restricted funds out. So that's a good sign. And then general fund divided by expenditures. This takes the ending general fund divided by total expenditures, puts it in a percentage form again. This one was an indicator on governor's proposal in the February 2015 proposal on the state aid status update report. So that was on page 2 in the center, I believe, so you could go look that up if you want to look at it. But one of the financial indicators was that it was 5% or above, so that this is well above that as well. So then below that, we have ending general fund divided by beginning general fund, so that takes the ending, divides it by the beginning, puts it in a percentage. If it's above 100%, there is a positive net change, which it is above 100%, and there was a positive net change. So that lines up. If it's below 100%, there was a negative net change, conversely. And then this indicator you can look at from year to year to see if your net change is increasing or decreasing percentage-wise from year to year. So we'll scroll down. These 4 boxes are a summary of the notes section of the audit, and in this review sheet there's notes from the audit included in page 4 of this sheet. So we'll get down to that information, but this was a quick overview for page 1, which many people in the office benefit from, including myself. So notes payable would have been associated if there was a state aid borrowing or other short-term financing. Now these 2 long-term debt here and capital operating lease, these are associated with building leases. So a charter school either leases a building or takes out long-term debt such as a bond, as Madison Academy did, to finance its school building. So when I put this note here that there is a lease listed in the note section that's included in this sheet and in the audit, we're going to differentiate from that just for that reason. So over here, so this is the bonded debt for the school building, so that's what this represents. This is the principal amount. And then below that we have the management note. So this is the expressly stated management fees from the audit notes. And then this is not the contractual percentage. This takes the total management fees and then divides it by the line item of state aid on the next page. So it's important to know that, so you're not wondering if that's the contractual percentage. So and then earned divided by fall 2013 takes the management fees and divides it by the fall 2013 count, which is on page 3 of this review sheet, and it's also the corresponding fall count to this fiscal year. So we'll scroll down a little bit. This is the square footage I had on the paper version of the audit. So if this is incorrect, if there was a change in the square footage of the building, let us know, and we'll get that updated. It impacts a couple of these calculations as I'll go over. And they're all formulas, so I could just have to change that real quick, and then I can reissue the PDF back to you guys, and everything will be updated. So utilizing that square footage, we have revenues per square foot, expenses per square foot, or total expenditures per square foot, and then the difference. Now these are something you could look at from year to year and see if things are increasing or decreasing, and wonder why. If there was a large capital outlay during a particular year, this expenditures or expense line amount might be skewed. If there's a large contribution of some kind, this might be skewed. So it's important to look at both of them. Same with those 2 indicators up in the upper right-hand corner of page 1. So those indicators dealing with revenue and expenditures, it's important to look at both of them for that reason, in case one's potentially skewed. So this takes this is the payment per square foot. This takes the bond lease and principal payments and then divides it by the square footage. So that's where that's derived from. So if the school had utilized a leasing method of financing their building, I would have taken the total lease payment for the year and then divided by that by total square footage. So this is kind of a way that for the charter school office to compare the bonded finance schools to the leased finance schools. So utilizing those numbers, the average for Bay Mills Community College schools, which we authorize 42 schools now, the average is $14. So this is above average in respect to Bay Mills Community College charter schools that we authorize. So, and then over here we have the operations and maintenance per square foot, which takes the line item of operations and maintenance on the next page and then divides that by square footage. Now this average for Bay Mills schools, again there's 42 of them, is $19. So this indicator is actually below the average. So these are things you can look at, and I'll try to provide the averages every time to give these a reference point. And then square footage divided by fall 2013 is just a measure of the total square footage per fall count. I have not averaged that out, but if you want, when I'm done with this video, this is the last one. When I'm done with this video, I can get that to you if you want to know the average. Down here, page 2, this is the breakdown of that box in the upper right hand corner of page 1. This kind of puts things out in more detail. So here's the actual from the audit in June 30, 2014, the actual from the 2013 audit, and then the difference. So these are audited numbers, which is why it's good to look at them and then see the change and try to understand what's gone on from year to year, and just compare for the board. And this can help communicate when new board members come on. This can help be a tool to communicate what's happened in the past. So this is all the revenues, and you can look at the expenditures. I broke out the instructions separate. I'll show you why in a moment. So before I move on, though, you'll notice that some of these have the accounting code in front of them, and some of them don't. If they were part of my template, I left them as they were, but this wasn't part of the original template, so that's why that doesn't have a code. But if you wanted to know what something is, we'll use basic programs as an example, since that's pretty important. I took the accounting manual, I put it in Microsoft Word. So here's the Michigan Public School Accounting Manual. And then you can come up to the upper right hand corner. This is Word 2013, so your version may be different. But you come up to the upper right hand corner, push Find, or you can hold Control and push F. And then come over to the navigation bar, type in what you're looking for. We'll use basic programs as an example. Make sure you're on Results, and then you can actually skim through this document. So if we were looking for basic programs, here's the accounting code, and then basic programs will provide a brief description of what's included in that grouping, accounting grouping. So instructional activities including enrichment, designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. So it goes on to say includes kindergarten, etc., and you could come down and see the subcategories and then move on to added needs. So this is a pretty good tool. If you don't know what anything is on that part of the review sheet, we can quickly get you the answer, or I'm sure someone at the school level can get you the answer too. So it's important to know what all those things are. And then one last thing before I go back to the sheet. You can't just come in and search for broad topics like instruction, because it's in here too many times. You have to be focused with your search, but if you focus your search, you're really able to use this pretty well as a tool to find things quickly. So we'll go back to the review sheet. So these are things you should look at from year to year. And again, if you don't understand what anything is, let us know, and we'll help you figure that out. So down here, this ending general fund balance should match up with the box in the upper right hand corner of page 1. Below that, we have our budgetary comparison. These are derived from the audit as well, near the end of the audit. Original budget, final budget, actual. This note is here to state that the original budget is due July 1, which is well before the count date and the start of the school year. So in a lot of cases, we see a large discrepancy between the original budget and the final, which is kind of the case here. Then the final budget and the actual is a little different too. So it's a positive difference, though, which is good. So budget difference, this takes the difference between the actual and the final, and then the percent change is between the actual and the final. So below that we have, so this is the instruction over revenues calculation. So I'll show you what this does. We'll scroll back up. This takes the total instruction and then divides it by total revenues. So you'll notice that the trend from 12 to 13 to 14 was 41, 40, and 47. So scrolling back up, we'll look at why this increased. So the revenues increased by 1.9 million, but total instruction expenditures increased by 1.2 million. So this is kind of a proportional calculation, and it's important to understand what's going on here. I've actually seen a school that increased its instruction expenditures, but didn't do so at a rapid enough pace compared to an increase in revenues, and their percentage actually decreased. So it's important to know what's going on with that calculation. Another example, a real example at the school level would be if a teacher was making $50,000 and he or she retired, resigned, left the school for whatever reason, and a new teacher was hired for $30,000, that would lower these instruction expenditures while not necessarily providing less instruction. So I've said this in every video that I brought that example up in, is that we won't get into the discussion on the quality of teacher, but from a financial perspective, that's an example that can impact these instruction expenditures, well, which would impact those ratios down there, those calculations down there, and it's still not necessarily a negative from the school's perspective. So it's important to understand what these calculations mean, and just know that it's not absolute, it's an indicator. So the average for Bay Mill schools, again 42 charter schools, was 44%. So Madison Academy is above the average in that respect too. So over here we have revenues divided by fall 2013 and expenditures divided by fall 2013. That takes the total revenues and expenditures and divides it by the fall 2013 count, and then the difference. So that's just a calculation you can look at from year to year to see how your revenues and expenditures are trending corresponding to the fall count, and also look at if it's trending upwards or downwards. So it's just a good thing to know and look at from year to year. So below that we have, moving into page 3, we have enrollment numbers. So this is kind of a unique design that I've designed this page out for you guys. Normally I just use CEPI for all the numbers. So I'll show you what CEPI means real quick. CEPI is a state website that stands for Center for Educational Performance and Information. If you wanted to find these count data, you'd have to go through My School Data, and you'd go through a couple links, and then here's some of the filters you go through. It's a little bit different going through the actual links because you have to come over here to the student counts and then fill in what you're looking for. But this is the general where it leads you to. So here's student count, free and reduced lunch count, which is just below the student counts, special education counts, grad and dropout rates. So these are really large spreadsheets. They go down to 91, 92. So there's a lot of good information if you're ever curious. I've dug that data out for you, so that's where these numbers are derived from. If you notice the last one, I have this note, I don't think you'll see it, but it says not from CEPI. This number is actually derived from the DS 4061 report that I had submitted to me via Epicenter, which, in case anyone doesn't know, Epicenter is the program that transfers files between the charter school and the charter school office. So if you ever hear anyone say Epicenter, that's what we're talking about. So now over here you'll see the state aid, and it says state aid enrollment. These are derived from state aid status reports or state aid sheets. What I did is I went back, I think the February or March of every year, and then looked at the fall counts when they were out, and then I went to the next year and looked when the spring count was out. So the reason I did this is the CEPI numbers, when I received this number via Epicenter, it kind of, I had been tracking these numbers with CEPI, and when this number came out, it was vastly larger than this number, and I think the original number was also a number with CEPI or through Epicenter was also in this range too. So then I contacted Jose, and he spoke to school representatives and said that there's parochial students utilizing teachers at the school, and that's why there's the difference between these numbers. So I just wanted to visually show the board and everyone at the school what I was kind of seeing. So you'll notice the difference isn't too large until we get up to fall 2013. Then there's a large jump. So this is the difference between the state aid numbers. So these are the ones that will show up on your state aid sheet, and then the CEPI count. So again, don't take this one in consideration though, because this isn't from CEPI. So I just wanted to put that on there because this is the number I received that was unaudited, that's subject to change, versus what was on the state aid report. And I think I did this from March, so I think this is either from March or February, so this one right here. So below that there's an enrollment graph, so this portrays this column. So you'll see the graphical display of the enrollment count, and then below that we have our free and reduced lunch count. So these are the free and reduced lunch counts from CEPI again, and over here this takes the total fall counts and then divides that by the corresponding total fall count. So I have been so this is an area where I didn't know if I should utilize the state aid numbers to do this count, or if I should use the SEPI numbers, because the state aid numbers include those parochial students. So when I issue this PDF out to you guys, I may switch these back over to SEPI, because that represents the these are from SEPI, so I'll probably change this formula to represent from over here. But if you could just look at it for a moment, you'll see it's 56%, 67%, 72%, and 51%. So that's utilizing the state aid numbers over here. I will recalculate those using the SEPI numbers to match them up, and that should match up the schools, or the students within the school, and not allow the parochial students to kind of skew this data. So that's why it's important for me to differentiate between these two, because they're different counts essentially. So it's important for the board to know what's going on, and we all have to be in communication about that. So below that we have the free and reduced lunch counts from up here. They're just in a graphical display again for our visual people. So that's the enrollment. Moving into page 4, this is the note section of the review sheet, and it's derived from the note section of the audit. So you'll see there's page numbers. These are from the audit. Now some of if there was a table for like the revenue bond, I may have put like the second revenue bond. Might be some of my words, so you might not see the exact words, but it's derived from the information directly from the audit. So I'm basically writing what is quantified in the table. So that's what's there. Normally the auditors, I just write what they write, but in this case I may have summarized a little bit, but you can go look at the tables, and that will give you the visual display that most people prefer anyway. So page 16, if you want to know about the revenue bonds. Management company note, this is the directly from the audit, page 7, and then there's the management fees that we already spoke about on page 1. There's no findings, which is good. Out of the 42 Baymel schools, we had 8 total findings. 4 were related to schools being small in scope and had a lack of segregation of duties, or kind of minor findings. And then BMCC notes is anything that's not related to the management note or the debt note. So this is just another reference to the contract. And right here, this payment per square foot, I will add a little title to that. This is something I wrote. This explains that payment per square foot calculation that we talked about on page 1 already, and with which the average was 29. So this kind of expressly states how that was what numbers were used to calculate that, because I used the 2014 interest and principal amounts that were stated in the 2013 audit. So you'd have to go look in the 2013 audit to find those numbers. So that's what that is, and that's why it doesn't have a page number. So that's actually what I wrote. I'm going to add a title to that before you get this too, so that may slightly change. And then this is reviewed by Mariah Wanick in our office, and then my email address is albertb@bmcc.edu. We hope you got some benefit out of this. And again, if you want to compare this to last year, you'll have to look in the annual report that was provided at the regional board training. And if you have any questions, comments, concerns, please let us know. We hope you enjoyed the video, and thank you for all you do for the children of Michigan. Have a good one. Take care. Bye.